Good morning, everyone. Welcome to Business Morning on Sunrise Daily. We do just about 30 minutes of business before we head back to the Sunrise Daily studio. We start from the global space. Oil prices rose during Asian trade on Thursday and spurred by concerns of Hurricane Francine as impacting output in the United States, which is the world's biggest crude producer. The worries of lower demand capped gains. We keep our eyes on the number now. And this morning, we're looking at November futures as well as October futures. For Brent, it's November futures. It's up 40 cents. 40 cents is about 0.6%, bringing it up to $71.01 a barrel for Brent. WTI, on the other hand, is up 0.5%, and that's about 32 cents. That's what it gained to get to $67.63. Of course, a major driver is that Hurricane Francine, which has been threatening the coast of the United States. And then also in the United States, oil stockpiles rose across the board. That was reported by the Energy Information Administration. Crude imports grew and exports dipped. Then the data also showed that gasoline demand fell to its lowest since May. At the same time, distillate fuel demand dropped, with refinery runs also declining. Noting that the United States is the world's biggest oil consumer, so whatever move or data we get from there certainly affects the global oil prices. Now in Nigeria, but still within the oil space, now the NUPRC has denied reports that it approved the sale of Egypt to. Just a minute, please. All right, we'll get back to that story in a bit, but let's look at the naira now and see what happened yesterday at the close of trade. There was an intervention from the Central Bank of Nigeria. Let's have the naira. We'll go back to the NUPL story in a bit. There was an intervention by the Central Bank of Nigeria, but in spite of that, there was a weakening at NAFEX at the close of trade. We saw it dropped 1.45%, but we always tell you to keep our eyes on NAFEM. That's where the real value is. So on NAFEM, there was a gain of 1.37. So it opened at 1,580 naira 46 kobo, but closed at 1,558 naira 75 kobo at the close of trade on NAFEM. So that's what happened. A bit of appreciation right there, but because of the intervention from the central bank, I think that's the second intervention we've had this week, and we'll see how that goes. This was expected or factored in by traders, but I mean, well, I guess our reserves are looking good, and we're just done with the $900 million dollar bond. So we have the ability, the central bank has the ability to intervene in the market. Now let's go back to that NUPRC story. The Nigerian Upstream Petroleum Regulatory Commission, the NUPRC, has denied reports that it has approved Shell International's $1.3 billion sale of its onshore assets to Renaissance. NUPRC clarifies that these reports suggesting that the Commission's approval of the transaction involving Shell's 75-year-old onshore asset are incorrect and not from the Commission. Earlier reports had showed that the deal had received initial approval under the Petroleum Industry Act and awaited final confirmation from President Bola Tinubu. The NUPRC says this is not true and that they remain committed to transparency and will issue an official statement to the transaction or on the transaction in due course. Once again, the Nigerian Upstream Petroleum Regulatory Authority, NUPRC Commission. I guess I woke up on the wrong side of the bed this morning. Please forgive me. The Nigerian Upstream Petroleum Regulatory Commission has denied reports that it has approved Shell International's $1.3 billion sale of its onshore assets of Renaissance. So they say it's not true. If you heard that story, please do cast it out. It did not happen, or it did not come from them. Now, moving on the program now, Nigeria has recorded a trade surplus of 6.95 trillion naira in the second quarter of 2024, driven by strong export performance, and that's despite a slight decline in the total merchandise trade. The surplus marks a 6.6% increase from the previous quarter. Exports, particularly crude oil, played a key role, with a total reaching 19.42 trillion naira. That's a 1.31% increase from the first quarter. Major export partners include Spain, the United States, France. However, imports fell to 12.47 trillion naira. That's a 10.71% drop from the previous quarter. China, however, remains Nigeria's top import supplier, followed by Belgium and India. The strong export numbers ensured a favorable trade balance for the country. Now, food insecurity or food security, food supply in the country is a major one for the country, and we've seen efforts by the federal government to boost food supply. The latest is distribution of fertilizer to farmers in the southwestern part of the country. It was of here in Lagos. I will bring you the report, and subsequently they promised that there are more incentives for farmers in the other parts of the country. Farmers involved in different crop and animal production are here at the instance of the flag off of the distribution of fertilizers to southwest farmers by the federal government. It's a good place to share challenges experienced in the process of ensuring food supply in the country.
If the government can help us, maybe assessing all those land, like we said, Afan has 57 SCDA in Lagos State. If Lagos State can have like 1,000 hectares of land and say, okay, like all our LGA, we give them 10 hectares as a cluster farming. And the government can come in to help us in the clearing of land, because that has been the major challenge. When you try to assess those land individually, clearing land has always been the challenges. And government come in this area to help us.
Mr. Rafiu,
ideas shared can be implemented by the same farmers.
I am also a poultry farmer, and I can tell you our price of feed increases from 18,000 to 28,000 almost every week. The only way we can solve it, man, there's no magical. It's when you improve or you increase production and soya.
The purpose of the meeting is next. Fertilizers are distributed to screened farmers. The representative of the special advisor to the president on agriculture says there are plans for even more incentives.
So this is the beginning. So the president is going to bring in so many interventions into the southwest. So the president is going to support the husbandry sector, is going to support the fisheries. So there are so many interventions on the way. So we use this medium to thank the president. So the president did bring us in from the private sectors so that we can actually make sure this fertilizer gets to the hands of the main farmers.
The threat of food insecurity is real in Nigeria, and seemingly little efforts and ideas carried out here hold the potential to contribute to supply. Let's go break now. When we come back, we'll head to the commodities space. I think we'll keep our eyes today. Let's leave the food for a bit and look at oil and what that's doing. We see crude is a major exporter that drove that our trade surplus. We'll talk about that after the break. Just stay with us. Welcome back to watching Business Morning on Sunrise Daily. Let's go to the commodities space now. We'll keep our eyes on the oil now. We see that trade surplus that Nigeria recorded, and we see that crude played a key role, with a total reaching 19.42 trillion naira. That's an increase of 1.31%. And of course, we did see from OPEC that our production in August also went up more than 3% to 1.35. Congratulations to Nigeria. Now we see what's going on with the oil prices. Brent is below 80, which is like a normal level, a resistance level for that commodity. Let's find out what all of this means to Nigeria. And we're discussing with Victoria Momo. She's a senior analyst with financial derivatives company. Victoria, good morning, and thank you for joining us on the program.
Good morning, Elaine. Thank you for having me.
So Hurricane Francine is causing an increase in oil prices, yet it is below, what we normally call the normal prices. What does this mean to Nigeria? Seeing that from this trade surplus number, crude is still a major export for Nigeria. What does it mean for our revenue?
Thank you very much for your question, Ini. So we've seen that oil prices have increased recently, and we would attribute that to the supply shortages that the global market is currently facing. I mean, in the US, there is the issue of hurricane that is impacting oil output because there are production shut-ins across some oil facility. So that is driving the global oil price of Brent. But I would like to inform you that actually this increase in Brent prices could be temporary because we have more pressures from the demand side. That is weak demand from China, and also the anticipation that OPEC would actually increase the oil supply in the global market. So that could drive down prices. We've seen, major companies actually reduce the oil price forecast for 2024, and that implies that oil prices are likely to fall. Interestingly, we saw that crude oil actually contributed to our export earnings, right? About 74% of our export earnings. So that implies depend or rely on crude oil for our foreign exchange earnings. So if global oil prices actually declines, it implies that our earnings from crude would actually reduce, and that is negative for our foreign exchange earnings and even the naira presently. A decline in limits the amount that would actually be set aside for the CBN to intervene in the forex market, and that could even worsen the pressures on the naira.
But I guess we should try to find a balance. So if our exports of crude reduces, because we have demands, domestic demands for refineries, from refineries, we have Dangote and the modular refineries who are asking for more crude. If our earnings from exporting crude reduces because we are satisfying domestic demand, what impact can that have? Wouldn't that be a positive impact, because it's going to also reduce the demand for FX anyway?
Yeah, so that is a very interesting question. So we export crude and we also import, refined crude. And from the statistics, we find out that, fuel products import actually topped the products that we actually imported in the country in Q2. So that implies that we are importing refined crude. So with the Dangote refineries and other refineries actually, producing petroleum products, we could see that reduction in pressures for, forex demand to meet our exports, basically. So it means that the money that would otherwise be used to import these commodities into the country would actually be used for, other investments and basically in the country. So there is the positive aspect of that in terms of this crude being sold to the refineries to produce refined crude, and then it can meet our demand, our daily demand for petroleum products, and reduce the need to import. So that means the pressure on the forex needed to import this refined crude into the country is actually going to reduce, and also ease the naira basically.
And we see crude improving. We hope that is sustained. We saw about 3.4% or so increase in our August production to 1.35. We haven't hit the 1.5 yet, but I mean, I guess if we can continue this this trajectory, we could actually have some succor for especially the domestic refiners and energy security and supply in the country.
Yes, that is actually very correct. Like in August, we actually recorded increase in crude. So that implies that there are still efforts to actually curb the challenges that it's currently facing, the oil sector. That is the crude oil theft, the pipeline vandalism, and then with the onset of, this refineries and also the surveillance that are being kept to ensure that these challenges are being curtailed, we would see the increase in crude, production. But basically, this crude production still remains, far below our budget benchmark of about 1.78 million barrels per day, and even OPEC quota. So that implies that we are still producing, suboptimally, and that could, limit the, earnings that we could get from exporting crude out of the country. And that implies that we need to still work to improve crude oil supply in the country in order to attract more foreign exchange into the country. And also that would, to a large extent, like I said, strengthen the naira, boost our external reserves, and also add additional, forex to the government to carry out a series of investment, productive investment that could ease the pressure on an average Nigerian and on, businesses that are currently being challenged by numerous structural issues and, challenges that weigh on their productivity level, profitability level, and many others.
All right, Victoria, thank you so much. We certainly do hope that the improvement is sustained. We have more crude, and we also reduce our imports of refined petroleum products. Thank you so much. Senior analyst with a financial derivatives company.
Thank you for having me.
Let's take a break. When we come back, we'll talk about the bonds, the dollar bond. A success for the federal government, but really, how do we define that success? We'll talk about that after the break.
$34 million hectares of arable land, over 200 million people, one nation. Home to Africa's fertilizer company. Dangote Fertilizer. Pure urea fertilizer. With one single-minded passion to feed Nigeria. Every bag is a potential, an aspiration to turn this green nation into the biggest food basket of Africa. Dangote Fertilizer.
Be Crystal Original. Get a pen you can rely on.
Welcome back to Watching Business Morning on Sunrise Daily. Let's head to the bond space now, the financial market. A success for the federal government. They set out to get $500 million, the very first domestic dollar bond, but they got $900 million subscription. And the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, said that the result of this is a historic bond issuance, that it shows that investors have a lot of confidence in Nigeria. Now, let's discuss more about this with the Chief Dealer Treasury, Polaris Bank Limited, Mr. Bankole Dusoye. Mr. Dusoye joins us in the studio. Good morning, Mr. Dusoye.
Good morning, Ini.
I say congratulations. Yeah, we went out for $500 million and we got $900 million. Yes, yeah, so, I mean, everybody's happy about that, especially the government. But some people are thinking of the cost of this. So they now have $900 million. This is not free money. This is investment from members of the private sector, you know, individuals or institutional investors. So if we could have what this means, the costs, we could have that slide, please. So there you have it, the cost of this to the government. So while we are celebrating $900 million, it does mean the rate is 9.75, wow. Yes. And this is from Mr. Bankole. They are the ones who deal with those numbers. So annually, the federal government will have to pay this $87.75 million to the investors.
Yes.
They have to pay this beginning from when?
It's from March.
March next year. Okay,
and
so
they pay twice
a year.
March
so
September.
They'll do March 2025 and then September 2025. I think that's dividing that into like two.
Yes.
So you do $43.8 million. In March and September to the investors. Good investment for me. Yeah, if I was able to raise $10,000, I think the least you could do was $10,000.
$10,000.
Okay.
So that that was the major advantage, because now we're dealing with domestic investors.
Yeah.
So this cost you're paying out is paying back to people who invested locally.
Yeah.
So it's not necessarily capital flight out of the country. So that's one way of seeing it. And then the other one is that, I mean, we need to look at the infrastructure gap and why they're raising these funds. I mean,
so before we get there, so this is what they'll pay annually.
Yes.
For 5 years, it's a 5-year security. For 5 years, they pay 87.75, you know, to the investors, divided into twice in a month and in a year. And then by the 5th year, they return back the 900.
The entire capital, yes.
Do we know how much this will cost at the end of 5 years, the federal government? So that would be 900 plus what this times 5.
5 years, that's it, roughly. That gives you about $400 million on top of that.
Okay, so 400 million.
An estimate of over 400 million. That takes us to about 1.3, 1.4 billion.
Well, about 1.3?
1.4 billion.
Billion. Yes. 1.4 billion.
Around
about 1.4 billion.
Yes.
Yeah, so that's what the government will pay for this $900 million so that means the government should be able to generate at least $1.5 billion from this in 5 years.
Oh yes, the cost-benefit analysis must have been done. Like I said, we have a lot of infrastructural gap that is yet to be met, and then we're looking. I mean, look at the situation in Borno State, the dam that has just collapsed. We have a lot of such that needs to be fixed or even expanded. And then going into the agricultural space, we're talking of insecurity on one end, of course, equipping the armed forces is one. On the other hand, it's about making sure the rail structure that we have presently is expanded into the interiors to help bring out goods and then help with silos and then processes, semi-processing of agro products so that we can improve on our non-oil exports. When the non-oil export expands, you'll see that our export proceeds in dollars is expanding. So we are not just simply hooked to the fate of the crude oil pricing. You can see that crude oil price has dropped from $80 below $70. So diversifying away from crude oil export proceeds is very important, and these are the kind of funds you need to reinvest into power sector, irrigation, agriculture, defense. So these are the cost-benefit analysis that would have been done before raising these funds.
But the thing is, we do not exactly know what or where this is going to be channeled. What we heard from the minister is that it will be channeled into strategic economic sectors based on the approval of the president. And this is where worries come in and questions come in. Shouldn't these projects that this will be channeled into, for us to be able to reach at least part of that $1.5 billion in 5 years, shouldn't those projects be outlined? I know it's not Sukuk. It's Sukuk you have, very outlined.
Specified.
Yes.
Those are tied to projects.
Yes.
Yes.
But don't you think that perhaps if that was done, so a Nigerian who has invested in this becomes not just an investor who wants to make profit, but also a contributor to the development of all this infrastructure that you're talking about. Because even up to now, we don't know what exactly they want to use it for. They just told us it to be channeled into strategic economic sectors approved by the president.
Yeah, ordinarily, if we go back to the budget of 2024 and the summary, and there was there were specifics when it came to critical sectors. It was defense and agriculture in particular. Of course, we had to secure the farmlands, and then, like I said, improve on infrastructure that helps to bring out and quickly the products, and then also help with processing and then storage, because we have a lot of loss of
post-harvest losses.
Post-harvest losses, which is a very big problem. So basically, diversifying away from crude oil it's been a critical sector in the mind of the government, and they've always spoken about that. So basically, it's in the budget. They're just trying to cover the gap, the deficit, the budget deficit, by raising this kind of fund, and then basically not going to the Eurobonds market, where we saw what happened. Rates were as high as double digits, number one. Number two, between the NNPC and Afrexim, the last cost of fund was about 11.75. So this is cheaper. And then going into next year, there's a likelihood that the DMO would raise this fund
because they're still going to $2 billion.
They're going to $2 billion, and with the challenge I'm seeing with Borno State dam collapsing, they may even expand that portfolio of debt stock they're trying to raise. But if the US Fed sits this month of September, there's a likelihood of rate reduction and then the multiplier effect globally. So this 9.7 could as well probably just drop to 8.75 or even lower going into next year.
Does that mean the naira is going to depreciate further?
No, that's not dependent on that. We're talking of cost of borrowing in USD going down, and then we locally having option rather than going to the Eurobonds market internationally. This fund was raised from domestic investors exclusively, so that's an option. We didn't used to have this option, or we never explored it. So this time around, we're seeing that it was largely oversubscribed. Number one, it showed liquidity. Number two, it showed trust that domestic investors were willing to invest in their own sovereign.
I guess is the use that we're waiting for now. I know you said, yes, obviously.
It's documented in the budget.
It's documented in the budget, but I mean.
The critical sector are defense, agriculture, education, and health.
Okay, all right. So we'll follow up in the next 5 years. Yes. You understand, to see.
On a yearly basis, budget achievement, we need to engage. So those who have concerns have genuine concerns. It's true that the concerns are there. We need to see budget achievement with vis-a-vis the amount that has been raised. That's what we need to ask, because they would spending this money on projects that have been highlighted in the budget and broken down per ministry. And
not personnel expenses.
No, hopefully not.
Okay, but I mean, I know you said it's cheaper money for the government, but it still increases our debt servicing.
Oh, yes.
But we are still around the safe space.
Yeah, that's your debt. Your debt servicing versus revenue is very high. But debt to GDP is still okay by the economic definition.
Should we be worried?
We should be, that we are growing, because year to date we have spent $2.8 billion on debt servicing. Before the end of the year, that could get to $3 billion, and this is coming in March next year. So what we have to focus on is the benefit that would accrue from these borrowings. We must ensure that these funds are spent for, like you said, critical sector funding, covering the gaps and ensuring that we become productive, especially in non-oil sector, so that we're not just fully dependent on oil pricing. That we saw what happened in 2020 when crude oil price dropped to below $40 and $30 per barrel. We do not want that again. We want to be a diverse economy that produces and then earns from multiple of sources. So basically, this should be funding that gap and not necessarily depending on oil prices dropped from 100 to 68. I mean, the worry won't be there if we are very productive on the non-oil sector side of it.
Yeah, well, that's honestly what we all hope for. It's just that when you look at the reality, yesterday we had an exporter here, and he was telling us some of the realities that they face as exporters. So we keep talking about the ease of doing business, yet issues are still abound. He was talking particularly about the folks on the road who disturb them. They have to pay. He said in Lagos, if you're heading to Apapa, he pays there are about 35 spots, and they have to pay 5,000 naira to each of those. Now, this has been brought to the attention of the government. You know, if we say we want to improve our non-oil exports, these are the issues we need to handle. You mentioned security. We know what's happening to agriculture. the reality of it, farmers are not going to the farm, Oil exports. Agriculture serves as raw material for huge industry in the country, and yet we are still dealing with the basic, which is food, not to mention the value chain, adding value and all of that. So these are realities, and I guess that's why the people want to know, while we celebrate the success of getting 900 million, heading to $2 billion, can we exactly know what project this is going into? Not just, critical sectors. We know the problems, they've been there, they've been in the budget since the beginning, but how do we follow up and track up, that this is being efficiently used?
Yeah, the concerns are rife. Imagine the exporters being able to move their goods on rail. It's going to be faster and more secured. Right now, of course, the security agencies have to bother with disturbances here and there on the roads, but if we were able to expand the rail structure to accommodate export agro products, then that would be very good. And then also we shouldn't be having tankers moving petroleum products also around the country. It's not efficient, it's expensive, and it's also very dangerous. We see the accident we saw happen in Kogi or in Niger State a few days ago. So basically, we should be expanding our capacity to transport on rail, not just human traffic, but also products, basically. So these are the kind of questions and pressure we should be putting on government, that these funds should be going to rail transport of non-oil products, basically. So the concerns are rife.
The other side is the FX issue. We've seen, I think we've had 2 interventions from the CBN this week.
Oh, yes.
Last week we had one to the BDCs.
Yes.
And then we see when they don't intervene, the naira drops. When they do, there's a boost. So a lot of people have said, well, it's a managed floating system, yes, that we're working with. And as they say, no country truly leaves the currency, to the demand and supply. But are we in a good place at this time?
We're at a better place compared to where we were a few years ago.
Few years or few months?
Few years, few months ago. Because what we're seeing now is CBN intervening when there's need, and not just coming, at a calendar period. So basically, they just intervene when there's, need to do that. And what is happening is that we're seeing a lot of letters of credit that were open half year come to mature. So there's a lot of demand for dollars, and then going into end of year also. Those who want to bring in wares for end of the year are also seeking for funds. This period we are currently at the period where the school fees are being paid by a lot of people locally, and then
is that a factor? I was told it's not really a factor.
It's not a major factor, but it's just one of it.
But it's a factor to the retail investors.
The retail market, where the BDCs need money to sort out something. So basically, the CBN has been intervening when there's need, and then it's kept the rate stable, basically. And then we have a liquid market. Compared to last year, 2 years ago, we have a liquid market. The issue at hand right now is pricing. So we're moved away from illiquidity.
Reduction of the gap.
We're moved away from illiquidity to a liquid market where pricing is the issue, and then central bank would usually come in to ensure that pricing is stable, because most investors want a stable environment where you can plan that if I come into Nigeria, I buy a treasury bill for 1 year, by next year when I'm leaving, I'm not far off where I came in. So stability is key. In that instance. Then
the gap between the parallel and the official market, that has also...
It's thinned out to about 100 naira. It used to be about 100% when we were at 400 to 700.
Yes, so we are in a safe place.
It's safer, definitely.
At least we can count some gains of the reforms.
Yes.
Of the reforms.
Yes, you can. It's tough. You can't deny that. But comparing to where we are, it's more stable environment to play in right now compared to where we are. And that's because of the CBN policies and interventions we've seen so far, to be honest.
Yeah, but we still have a lot to do, especially from the fiscal side. Thank you so much, Chief Dealer Treasury, Polaris Bank Limited, Mr. Bankole Odusanya. Thank you. Thank you for the numbers.
Thank you.
Through the calculation.
All right, thank you.
All right. $900 million is going to cost the government about $1.5 billion in 5 years. That's what investors will take at the end of the day, the cost of that. But as Mr. Odusanya said, we do hope that actually it's channeled to those really critical areas that will boost economic activities, and the economy can generate more than $1.5 billion in 5 years, if that's well used. Now, just before we head back to the Sunrise Daily Studio, let's give you market numbers yesterday. It was just a very dead cat bounce is what they call it, just one recovery, and then we're back to the red zone. That's what we had at the close of trade yesterday. 0.09% in the red is the all share index, 55.575 trillion naira, the equities cap, and the market lost 51 billion naira. Doesn't sound like a lot, but I mean, dragged the market down. And guess who did that again? Our friend O&O. O&O has been in the news since after that acquisition was completed. But the activity chart we see was mixed yesterday. 600 in volume, 8.81 in billion in value, and deals 9,546 at the close of trade. Sectors, banking. Banking is back. I think UBA contributed to that. It's been a while since we had that UBA. So up 0.64. Consumer goods, Dangote Sugar. We're happy for investors in Dangote Sugar. There's been a lot of profit taken on Dangote Sugar, but yesterday there was a recovery. So they contributed to this positive number. Industrial goods slightly up. Insurance not been getting a lot of good attention recently. Then oil and gas, in spite of the fact that O&O was in the red, we saw Seplat drove this yesterday, 1.73% of the oil and gas. Top trades, Jaiz Bank, UBA, Access Code, the financial sector, they contributed to that. And the smaller markets yesterday was also positive. And well, we'll give you more information from the market and from the world of business at 1 p.m. Ladi will be here. Ladi Williams with Anite Edet. They'll both take you around the world of business in 55 minutes. I'm John McQuarrie. Let's head back to the Sunrise Daily Studio.